This month's crypto markets have been in freefall, and their troubles have been exacerbated by the failure of a $16 billion project that opponents have labeled a Ponzi scam. Hey guys, welcome back to another interesting video. Today we'll be showing you the ripple effects of cryptocurrency's free fall. Before we start, don't forget to thumbs up. Also make sure to subscribe to our channel and don't forget to turn on the post notifications to not miss out on any of our future updates. TerraUSD. USD is a stable coin tied to the US dollar that its proponents anticipated would disrupt existing payment systems around the world. However, it was quickly wiped out as frightened investors attempt to withdraw their funds, resulting in a violent, self-enforcing bank run. As a result of the meltdown, many investors went bankrupt, bringing down the entire crypto market and wiping out nearly $400 billion in market capitalization. On Twitter, Jake Cherwinski, the head of the policy at the DC-based lobbying group Blockchain Association, stated, "This is among the most painful weeks in crypto history and one we'll grapple with for a long time to come." While Terra investors were the ones who were hit the most, the company's demise could have both short and long-term ramifications for crypto and beyond, especially as various legislators and regulators assess the damage. In a statement to Time, Massachusetts Senator Elizabeth Warren said, "People have lost their life savings through crypto investments, and there aren't enough protections in place to safeguard consumers from these risks. To control this highly volatile industry, we need tighter laws and enforcement." Here's what happened and what's in store as a result of the disaster. So what precisely happened? Without prior knowledge of the blockchain, Terra's fast ascent and collapse can be difficult to explain simply. To capture some of its glaring shortcomings, many of its supporters used obfuscation and language. Here's a quick rundown of what's going on. Terra, like Bitcoin and Ethereum, has its own blockchain, the USD stablecoin, which is tied to the US dollar, is the company's flagship product. Crypto traders use stablecoins as safe havens when markets in DeFi, decentralized finance, get choppy, instead of changing their more volatile assets into actual cash, which can be costly and result in tax issues. Traders simply trade them for stablecoins. Some stablecoins get their value from the fact that they are entirely backed by reserves. If investors choose to cash out at any time, the stablecoins foundation should theoretically have enough cash on hand to refund them all at once. USD, on the other hand, is an algorithmic stablecoin that maintains its peg to the dollar through coding, constant market activity, and sheer faith. The peg was allegedly backed by the algorithmic link between USD and Terra's base currency, Luna. For the past 6 months, investors have been purchasing USD with one aim in mind: to profit from borrowing and leading platform called Anchor, which offered a 20% interest to anyone who purchased USD and lent it to the protocol. Many critics immediately equated this prospect to a Ponzi scheme, stating that Terra would be unable to give such a significant return to all of its investors due to mathematical constraints. Terra employees admitted as much, but equated the rate to a marketing investment to raise awareness, similar to how Uber and Lyft gave essentially discounted rates when they first launched. However, according to several blockchain specialists, affluent investors borrowed large amounts of Bitcoin to buy USD last week, with the purpose of profiting handsomely when the value of USD collapsed, a strategy known as short selling. As a result, the USD depreciated against the dollar. Investors who had received interest from Anchor were rushing to exit before it was too late, resulting in a bank run. As a result of their actions, the associated currency Luna also crashed in a death spiral. USD is currently worth about 12 cents, while Luna is only worth a few cents after reaching a high of $116 in April. Many Luna and Terra investors' life savings evaporated in a couple of days. People speak up about their mental health concerns and thoughts of suicide on the Terra Luna subreddit. "I'm in the midst of some of the darkest, most intense mental anguish I've ever experienced," one poster remarked. "It still doesn't seem real that I lost $180,000. Terra brought Bitcoin and the entire cryptocurrency market down. Cryptocurrency values were already on the slide before Terra's meltdown, thanks in part to the Federal Reserve boosting interest rates. They did so in order to combat inflation, which has resulted in consumers spending less money. The crash of USD, however, caused a further impact on the broader market, owing to the fact that Terra founder Do Kwon had purchased billions of dollars in Bitcoin as a safety net for USD. When he and Luna Foundation Guard invested more than $3 billion to protect the peg, other major investors dumped their Bitcoin shares, putting downward pressure on the market. Kwon's attempt to save USD failed as Bitcoin plummeted to its lowest level since December 2020. The way these algorithmic stablecoins are structured, they have this upward impetus during bull markets, explains Sam McPherson, an engineer at MakerDAO and co-founder of the software design firm Bellwood Studios. However, during bear markets, the same forces act in opposite direction, exposing fundamental problems. That is, in the end, what caused the crash. The effects were felt by the whole crypto community. Ether fell below $2,000 for the first price since July 2021 as a result of corporations selling about $30,000 of Ether in their own attempt to defend USD's peg. As more investors attempted to cash out their Ethereum-based stablecoins, Ethereum's transactions costs rose, causing even more money to be lost. Coinbase, one of the most well-known and largest cryptocurrency exchanges, saw its stock plunge 35% last week. The NFT ecosystem has suffered a 50% decline in sales volume in the last 7 days, according to CryptoSlam. As a result of cumulative effect, hundreds of billions of dollars were lost in the ecosystem. Many fear that Terra's demise will set off a long-awaited crypto winter in which mainstream investors lose interest and prices remain low for months. I expect some cryptocurrencies will be worthless and capital investment in the field will draw to a halt as investors milk their losses, similar to what happened during the internet bubble. Bloomberg's Edward Harrison said, "So what could happen as a result? Regulations could tighten." For a long time, regulators have been keeping an eye on stablecoins. Congress conducted a hearing in December to analyze the risks and benefits. In the same month, President Biden's working committee called for urgent action to regulate them. The fall of Terra provides regulators with even more ammunition to claim that space should be encircled by political authority. Treasury Secretary Janet Yellen called for extensive stablecoin regulations on May 12, noting that while the largest meltdown isn't large enough to harm the entire financial system, stablecoins are expanding very rapidly. They pose the same kinds of risks they have been associated with bank runs for ages. The fallout of the Terra Cash, according to Hilary Allen, a professor at American University Washington College of Law who testified about the risks of stablecoins at a congressional hearing in December, gives us a glimpse of what could be in store if crypto moves towards the mainstream without regulation. Representative Jake Auchincloss of Massachusetts tells Time that he is working on legislation requiring the federal government to examine stablecoins. Stablecoins should not be prohibited, according to Auchincloss, because they can assist maintain the US dollar as the world's reserve currency. However, he hopes to bring stablecoins under the jurisdiction of a federal agency such as the comptroller of the currency, as well as to ensure that stablecoins issuers can demonstrate that they have 90 days of liquid reserves and to investigate the possibility of requiring them to provide insurance to customers. "We're going to empower the federal government to ensure that no systematic risks emerges from the sector," he says. Senator Warren has been one of the most outspoken critics of cryptocurrencies, citing Terra's demise as proof that regulators need to crack down on stablecoins and DeFi before it's too late. According to CoinDesk, the European Commission is considering imposing a hard cap on the daily activity of major stablecoins on the other side of the Atlantic. Meanwhile, much of the crypto community appears to have accepted the inevitability of impending regulation. A lot of people's lives have been damaged as a result of this, Macpherson adds. The content of this video is for educational purposes only and hence should not be considered financial advice. All of the financial decisions should be made after doing your wide spectrum research. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then.